Thank you very much. I got a sudden awakening about 4 weeks ago. I just wake up and I understood that this is really the train is going. I don't understand anything of this. I just have to top on. And I got this flashback more than 20 years ago. I was writing the first in Norway writing an essay on tax and computer. And people told me that, well, this is, of course, very theoretical, interesting, but has no practice value at all. And then software came. And then in 96, I wrote an essay or a paper, a doctorate on software taxation and internet. And the same guy said that this is very theoretical, interesting, but has no practical impact. And trading of the internet, just forget it. And now we're here today. And I would assume that in a few months, there will be many more people here, because this is really something we have to look at. And the lawyers, we are not the best in class to follow this, but we have to stick up, and also tax. Today, we'll do this together, Sverre and I. So we'll kind of form each blocks. So first block, second block in a blockchain. And we have a principle, both Sverre and I, we have the KISS principle, keep it simple, because this is too complex already. So what we have done is we have made a case, a very simple case. This case, which is quite similar to what we saw Friend in the last presentation. And what we'll do, we'll go through this case and we will address the tax issues so that you have something you can picture when you go home at night and just think that tax is something which I have not thought about, and it's actually quite complex. And it's important because if you get a tax audit and a tax claim, we have clients coming that have got a tax claims of 40, 50, 60, 70% of the income. So here we have a company, Startup AS. They have 3 shareholders, one in Norway company, one person, and a Cayman company. And the startup has invested IP worth 210 into the company in form of IP, apps, etc. The startup say that, well, let's issue functional tokens. So they issue 7 tokens. It's not like 1 billion, but in our example, 7 tokens. So even a tax lawyer can kind of follow it. So 7 tokens. And they go out and they sell 5 of those 7 tokens. And they actually get 100 each. They get 500 into their pocket. So they get 500 cash into the company. And they keep 2 tokens themselves in case it might increase. So the first question is, how do we classify this? This Norwegian token holders, and it could be foreign tokens as well, but how do you classify this? That's the first issue, first transaction. And then one of you guys, a token holder, see that it has increased in value. So what I do here, I sell my token to the US company, Microsoft, because they really want to have this technology, so they buy this token for 200. And they pay 200 to Norway. What happens in that transaction? What kind of taxes are triggered in the US? Now we're talking white economy. We're talking a company paying 200. We don't talk black money. We're talking what do white companies do? This US company, they have this token. They bought it for 200. And then they say, I need this app from the startup. So I convert my token into startup and get an app back. The price at that time has increased. It's 250. What happens then? The startup have a good idea, a good platform, a lot of customers, and they get a partner, this guy. What happens when you get the partner transferring software into this company and takes part of the profit making? And then you have a startup thinking, well, I have a lot of IP, the value is very high. Should I maybe transfer my value and my IP to a company in another country? Then you have transfer of IP. The last question is also that startup has a token and they say, well, maybe I will sell it and get some cash out of it. and then they sell it. This is the basic scenario. Sverre will run you through some of these, and I will run up to some of these, and also you're kind of looking forward to this, aren't you? And then you can, in the end of the presentation, you can ask questions, because I hope you'll get some of the tax issues and VAT issues wrong. So yeah, go ahead.
Thank you, Gert. We can go to the next slide then, trying to go through some scenarios. Before we do that, we thought we would have some kind of starting points, what actually tax is all about. And one point is that taxation of any kind of transaction is generally based on the, call it the underlying classification of the transaction from a legal point of view. So in order to be able to say something about tax, you must actually look at what is happening. It's more or less like we heard the last speaker going through the regulatory stuff, making up and looking at what kind of token is it a security or not. The kind of comparison is not so different from a tax point of view. First thing then is actually to ask, what actually is an ICO from a legal point of view? Or a TGE, if we want to call it that. And is it a capital issuance where someone is buying into the equity of the company? Is it a loan? Actually, it's a way of financing the company, but is it a loan or is it something else? I think few comments here is that when you look at these functional tokens, which gives a right to a product, software, an app, or similar, my view is that would usually not be considered as a capital issuance from a legal point of view, because the buyer of the token does not get any organizational rights in the company, does not get a right to vote, does not get a dividend right, or said another way, don't get a part of the equity of the company when the company is made money, etc. That still belongs with the shareholders, yeah? But I also learned today that tokens can be developed into more complex instruments, maybe even attached with certain rights that we would usually deem as a shareholder right, the one or the other. I think we just have to say that the classification of that, such, we call it advanced tokens, is more uncertain, but most likely not a capital issuance. And what's the tax consequence of that? The tax consequence is that a capital issuance is generally a tax-free transaction for the company. A company issuing shares is never taxed on the proceeds it receives in an IPO. Is it a loan? I don't think so. These tokens could be considered a loan, because a loan is kind of presupposing a debt-creditor relationship with a duty to pay back something. It could be discussed maybe in a future seminar if the right to get the IP or the app is actually an obligation to pay back in kind, not in cash or currency. But I don't think it's a loan either. So my preliminary view is that most token issuances is probably a pre-sale of services and or some kind of IP right and or the usage of a platform or software product or something. And we can say actually that already now, a pre-sale of something that creates generally in most jurisdictions a taxable event. I don't say that you should be taxed upfront just by issuing the token, but here is something, if you sell something, goods, services, IP, whatever, it's usually a taxable event. Maybe in the future when you deliver the product. Maybe before. So, that's what's an ICO. What's a token then? Is it a share? Probably not. Currency? Maybe. But several jurisdictions has made a few advanced rulings with tax issues and stated that such tokens and or even some other currencies should be considered as property. Some kind of property, eiendel. And having a property may be decreasing in value or increasing in value, maybe selling it later, as we saw Gert mention, would usually lead to a taxable transaction. I think we can go to the next, yeah. Yeah, we have some boxes here. Yeah.
Yes, I think we are there, aren't we? No, we are not there.
I have mentioned it actually.
We are here.
Is the value
We're
taxable or when? Yeah.
And then we are like
You
there.
can take case 1. Startup is actually in case 1 starting its TGE. It's issuing tokens, only 7 here, but nevertheless tokens, and get something back. Maybe the currency the startup get is not NOK or US dollar, but maybe it's Ether, or maybe it's something else, but it gets something back. Is this taxable for startup? I already gave some assessment now saying that if it's a functional token, giving the right to the product, probably this shall be deemed as a pre-sale. I may be wrong, but that's at least one assessment. A pre-sale is generally taxable, and this actually makes a difference then between a regular capital issuance and a token issuance, that the proceeds from the tokens could be taxed in the company. If it will depend not only on the classification of this token, what is it actually, but it will depend on the jurisdiction of the company issuing tokens. Under Norwegian law, I would assume that this could be a taxable transaction, that income is invunnet, as we say, but maybe not subject to tax yet, because in order to be taxable for some income, the company that delivers the product is usually also have to deliver it. It's kind of cash against sausage. So if you keep the sausage and haven't delivered the app yet, maybe the time for tax has not come. That's on the company level. And I think, is that, yeah, we can say something about the VAT here. Yes. Because there was a question about that. As you know, a company selling software, apps, whatever, is generally liable to VAT under the Norwegian rules at least, also in the EU generally. A pre-sale, how shall it be treated for VAT purposes? I think I must say, I don't know, but maybe it's a VAT transaction also when the sausage is delivered in a future time. I don't think it occurs when you issue the tokens. Comments yet?
No, well, the only comment I have is that this example just shows what you have. The cost of the IP is 210, and the fair market value is 700. So the cost of each token is 30. And what is the IP? Is the market value of the IP 700 then in the company?
Good question.
Yes, and as you said, since this is a token for downloading IP, it has not been delivered yet. So it might be that they have an income, it is not yet taxable. That's an important point. The last important point is the arrangement, the way token is, the agreement, the ICO white paper. What is it? Have you bought a currency? For some people it's currency, but have you bought a right to get some IP? You have got the right to download the app. So that's kind of a right to IP. You have bought 100 for the right to download one IP in some period of time.
Or a license.
Or is it a service? Yes, a kind of a software service. Is it an option, which is a financial instrument? You just have to look at the white paper and go through and see what kind of duck is this? What kind of thing is it? It's kind of Internet of the Things. What kind of things is it? And even though I can add one more here, is it a franchise? A franchise gives the franchisor the right to somebody to use information which the franchisor had, just like Rema and McDonald's. It could be that. You just have to look, and the tax consequences on these are different in Norway and in other countries. I think this is maybe the most important thing. You have to look what is it and what kind of tax obligations and tax issues arise through the chain we explained in the starting point. You know, the big picture, the going around.
Yeah. Okay, going to case 2 then, or yeah?
Yeah, we are here.
Yeah, then this seller, let's assume he's a Norwegian guy. One of you has bought some friend tokens, and it actually happens that this token is growing in popularity because friend is doing well and the product is blooming, and then the value is like 200. It's possible actually to sell the token with a gain. What happens then? Well, as I said, a token is probably property, and selling property, this kind of property is generally subject to tax. There are exemptions for such kind of property as your home furniture, etc., and other kind, but we don't see that these exemptions would apply here. So basically, the gain of 100 is probably taxable as a gain on property with 24% tax rate in Norway currently. And also, let's assume yet that he doesn't sell it before the year has ended. So the holder of the token in Norwegian, he comes to 31 December and he goes into the next year and he gets a tax return in his mailbox, in Alt-In at least. And then he has his bank accounts there, and he has some share funds, and he even has a few shares in Statoil. But there is no information here about the token or the bitcoins he has also purchased. So basically then, since token is a property, it is subject to net wealth tax in Norway. Countries with wealth tax, formuesskatt, would typically deem this as a taxable property, and the holder must himself put it in his tax return on other property and put up a value last 31 December, if he can find that. Otherwise, he just must assume some value, or even put down his cost price, and maybe have a note in section 5 saying that I also hold something called a token, and I think it's worth 100. Yes? Yeah.
What happens when you're converting to, let's say,
Mm-hmm.
do you realize
Yes.
here, does that mean
Yes.
you act for that?
Yes.
And again, when you're selling that again,
Yes. Basically. Yeah.
the Ethereum is much higher than what
Mhm.
you got into.
Yeah.
You need to, it's like a
A never-ending tax adventure.
Tax is a never-ending story.
It's not actually double and triple, because the same thing happens if I have shares in Statoil and I bought them for 50 and they are now worth 120. And I say, I changed my Statoil share for some Norsk Hydro share. So I sell my Statoil share, I realize that one.
yeah, but you get here. In this case, you don't get.
But then, when I sell the Statoil and when you sell the Ethereum, you get 120 and you have a cost price of 50. That's a gain. You must note it down on your Excel spreadsheet and remember it when you're going to file your tax return. Then you buy instead the Hydro share or the friend token. And if that increases in value and I later sell that one, there's a new transaction.
You have a new law now, legislative rule.
Oh, yeah,
Yes.
but
That is correct.
it's just postpone the tax, but it's...
Yeah.
Postponing the tax.
It's a good question you say. And
but
if
that
was-
is not covered by the rules.
Exactly.
Sorry.
If I was going with Statoil shares and Hydro shares, I could put those securities into aksjesparekonto, and I didn't have to pay the tax every time I make a change and realize. But these kind of tokens, they are not an object. not yet at least, that can be covered by the aksjesparekonto. And even you also have, if you are more like investor guy, you have your own private companies usually, which can buy and sell shares, stock, with no gain. But these tokens and cryptocurrencies doesn't qualify for that either, for the fritaksmetode.
Okay.
Well,
But okay,
just before we go to the
Yeah.
wheel tax, general starting point, realization is a gain
Yeah.
of property, probably taxable.
100 period.
And then yet we
Yeah.
sold it to a US guy, so
Yeah.
there's some
Yeah.
international aspects too.
And this is also a very, very important thing for you to know. And so how many of you know what withholding tax is? Okay, withholding tax is very simple. Is that if you're a Norwegian company and you sell something to a US company, and the US company pays 100 to Norway, the US company will deduct a tax of 30% on the gross payment. That's a very, very high tax. That can be reduced if you can show that the Norwegian company is a Norwegian company resident in Norway with Norwegian owners, etc., etc. But the withholding tax is a principle where the payer deducts tax. So it's not your control. So meaning in this example is that the US company pays 100, and what happens is that the Norwegian company gets plus 100. That's the invoice, but they get minus 30, so they only get 70 in the pocket. And the 30, that withholding tax, you can credit, you can deduct that tax against the tax on the Norwegian income. So if the Norwegian income is the Norwegian income is 100, and what is the Norwegian tax on that income? Let's say the income is 100, it's still 100, and let's say the cost to do this is 50, so the net income is 50, and the Norwegian tax on 50 is 24%, it's 24. No, it's 12. Lawyers. 12. And then you can take that tax and deduct from this, so you pay 0 Norwegian tax. So it's an asset for you. Okay?
But the important thing, I guess, is that if a Norwegian seller is selling a token which is deemed like a functional token, which gives a right to IP,
Yeah.
there are countries that treat the payment for IP or services in a way that the country prescribe that the buyer must withhold tax at source in that country. It
Yeah.
cannot be only the US, but the US typical
Example, it's China, it's Singapore, it's Japan, it's everywhere. So
you
if this is a company, it's a wide company, it pays something for the token, it want to book it as a cost, then they will deduct that tax.
If it's IP related.
If it's IP related. But that tax can be linked to an IP right. It can be linked to interest payment, if it is an interest payment. Normal not for goods, normal not for currency. So it depends what it is.
And here I think we have an interesting question, because if the token is designed with a lot of, call it, shareholder rights, and the token is designed in a way that makes it like a security, maybe that withholding tax can be avoided.
Yes.
Because if I have a Statoil share and I sell it to a US company and he's going to pay me, the US does not impose withholding tax on the purchase of a financial instrument, but they do impose it, as Gjert say, on the purchase of IP rights or technical services.
Yeah.
India do the same.
Yeah, 10.6.
So here again, these taxes we have written here may apply or may not apply, depending actually on the instrument. VAT, Gjert, should I mention
Yeah,
the
come on.
Norwegian ruling? There has been question about when, not for the seller here selling for 200 with a gain 100, but when you sell the tokens, you have to go through some kind of exchange, yeah? There are websites arranging for you the exchange of tokens into Ether and then into whatever, yeah? These traders, or exchanging machines, as I call them, they are doing a business usually with this. are that business subject to VAT? If someone in Norway wants to set up that. And first, Norwegian authorities said, yes, it is subject to VAT because they are not exchanging financial instruments, exempted. But then there was a judgment in the EU in 2015 saying, no, the trade or purchase and sale of cryptocurrencies, Bitcoin, should be considered as purchase and sale of financial instruments covered by the VAT exemption. So now Norway has also issued a ruling saying that kind of the trade is not subject to VAT.
Yeah.
But at least we know something.
But it depends whether that ruling also applies to what is that kind of a non-security token, or that applies to a security token. So that is to be seen. Okay, we are now going case 2. We are on to case 3. No, that was wrong the way. Here we are, case 3. In this case, the US guy who has bought the token, he wants to convert his token into startup and receive an app. He do what he's actually planning to do with the token. He passes it on, he gives it to startup, and he gets this back, gets an app back. And in this case, this is actually this company has a profit, of course, because it bought it for 200, and it sold it for 250. It has a capital gain. And in the Norwegian company, they got 100 for it in the starting point. Now they get the market value is 250, so they probably have a gain of 150.
Yeah, and now, I'm sorry interrupting, but we have agreed to interrupt, so. The Norwegian company now, we put up here income recognition, 100 or 250. Now we get back to the question I raised in case 1, where the issuance of token, is that taxable for the company? And I said, maybe yes, but maybe not yet. And I mentioned that when you deliver the sausage, then the company has received funds, money, and it has delivered the sausage, the app. Then you kind of have completed the wheel. And I think then, at least then, the startup must book in its account sales income. And the interesting question then is, what is the sales income here? Is it 100?
Next slide.
Was,
That is next slide.
Is it?
Yes.
I don't think so. It's here.
Yeah, but okay. Yeah, it's because you have more.
Okay.
More.
But is
yes.
it 100 or should it be 250, which is the value at the exchange date?
Yeah, good. And just to scare you, when he's paying token for this app, is there withholding tax on that transfer of token because the value is 250? Then you get withholding tax twice. I don't think it will be, but it's just mentioned it. Then you have the 4 case, the case 4.
But that's a little bit different, though.
Yeah, then we're getting into all these numbers.
Yeah.
Here are Sverre. Go ahead.
No,
with all the numbers.
It was actually the
last
case. The last case raised the case 3 raised this income question: is it 100 or 250? Now we are into going even further. The sausage is delivered long time ago, but the company has some own tokens, and it kind of there's a market for them, and I don't know if we should call it reissue them or just sell them or whatever, but they put them into the market at least, and now the value is 300. Is it a profit? I'm not sure, because still the company is kind of issuing already issued tokens. Is it a 50 profit in the company? Nah, I'm not sure. I'm liable to think maybe no, because the company hasn't gained anything. But sometime in the future, all these tokens will be maybe delivered against apps. But there could be different solutions here on the reissuing or the company sale.
Yeah, good. Now we are proceeding here. We are case 5 here. And in this case, startup finds out that they need a partner. There's a partner here who develops software, and they suggest to that partner, why don't you transfer copy to my platform, and you will get 50% of the sales income from your IP. So you transfer some IP here, some apps, and when the company is receiving tokens for that app from the partner will have half a token. So the company earns half, and the partner earns half. That's a fair deal. And of course, in this case, there is a payment from Norway to the US for 150 for that token. When this is sold, when this is coming a token in, there will be payment out again. And this is a payment out of Norway to this partner. And the question is, what is the partner? Is he a subcontractor just delivering a service into Startup AS? And if it's a service and he delivers software and he gets paid 150, there may be a Norwegian royalty withholding tax which the state proposed to introduce from 1st January. Because then it's a payment for software, payment for royalty, and then the withholding tax kicks in. So it could be a withholding tax, it could be a service. However, it could be that this partner is a joint venture partner. He's doing business. He's putting something into the company. He's participating in the company. He's taking risk. Putting in for free. He gets money back. That's business. So then, if he's doing business, he's a partner. He's taxable to Norway. He has to deliver tax return, company tax return, file a PE, register for VAT, maybe, etc.
Maybe they have to rethink this transaction and merge the companies instead.
Yeah, but you don't want to merge with this guy down in Palo Alto because he can one thing and you don't want to make him part of the rest of the company.
Exactly.
So that is, now we're going to case 6. And case 6 is kind of more like traditional rules on a new technology, but it's nothing really.
It's not directly linked to the issuance of tokens. It's not directly linked to cryptocurrency, but we took it in just to show the lifespan of technology company can also include kind of other transactions.
Yeah. And what is said, when you have an internal transaction from this company to the Norwegian company, or from this company, especially to a foreign company, you have to do what we call transfer pricing. You have to price that at an arm's length. So in this case, if the market value is 300, the price is 300. And the US and many countries require documentation in order to prove that this is 300, and they get what they paid for, and they're taxed according to that. So transfer pricing is very important. Part of this. And it's a complex because it's, yeah. And now we have case 7. These owners of startup, they are sitting on top. And I'm not completely sure how much money the company will generate because the value of the company is attached to the tokens. But there will be some cash here. They have been selling and buying. They have a profit on the token. The token to the partner. They have some tokens themselves. They can get cash from. So there are some profit here.
Yeah, we should assume that. And it's interesting. I was thinking of today. How is the division actually between the value connected to tokens and value connected to the shares of the company? But I guess it's a reasonable assumption that any company with stockholders, they want to retain a stockholder value. They do the TGE in order to increase actually stockholder value as a means of getting capital. So even though a part of the company's IP is reserved for customers, I assume that there will be cash generating from the issuance of tokens, but also maybe from other sources. And these funds are ultimately flowing up, usually at least, to the shareholders, yeah? But please enlighten me there. But I think this must be the basic concepts.
And then you have what we say, Sverre, when Norwegian company is paying up to a shareholder, there are withholding tax if it's paid to foreign shareholders. So in this case, the Cayman person, Norway, this company would have to deduct 25%. So if the dividend is 100, they would have to deduct 25%, 25, and pay to the Norwegian tax authority as a withholding tax.
So don't have Cayman Island stockholders.
So what many companies use, for top companies, they can use, for example, the United Kingdom. United Kingdom, they don't have withholding tax on top. Switzerland has withholding tax. That's important. So Switzerland is not as good as UK as a holding company. So this is the withholding tax issue. And now we are going into the, that was the tax question. And now we're going into also, just you can supply that, Sverre?
No, just the same issue actually. If the Norwegian company has a subsidiary in the EU or in Switzerland or the US, and this is interesting also for Norwegian companies planning to do their ICO in a different country, that funds are coming into, let's say, a Swiss company. You may use those funds locally to develop software, but again, maybe the software IPs are actually in the Norwegian holding company or in the Norwegian operating company. So in some way, you need to get the funds up. And then you have these kind of withholding tax issues, and you just have to be aware of it and how to handle it.
Yeah. And now, case 8, which is also quite important. That is the company. The company, as we said in the starting point, the company has developed this IP, and they say, why can't we transfer this IP down to a separate IP company in another country, where the tax is much lower? In Norway, the tax rate is 23, 24%. In many countries in Europe, for IP companies, the tax is like between 2 and 12%. So what if you take the IP here, you transfer it down here, you create value here, you're taxable here at 2 to 10 to 12%. But in order to do that, so the first bullet here is the tax is low. But when you transfer the IP from here, from Norway to IPCO, you will get a capital gains tax. You will have to see what is the value of the IP. So it's a value. In this case, the value is actually, if you say the value is the tokens, the 300 is 300 times 7, it's 2,100 is the value. And the cost price, as we remember, was 210. So the value is about 2,000. So you pay like 600 in tax in Norway. So you pay a lot of tax when you transfer this down here. So the question is, how can you reduce that tax? And it can be reduced by different kinds of royalty models. It can be reduced by taking it against carry-forward loss.
Maybe we can have a demerger and cross-border merger, etc.
Yeah, so it's different options here to do that. But what is important, number 3 here, is that when you have an IP company in another country, let's say this is in Switzerland, or in Cyprus, or Malta, or Gibraltar, this company is owned by a Norwegian company, and what Norway does is we tax this company as it was Norwegian according to rules called CFC. We just tax it every year for the income this company earns. And if that is the case, it's no sense in moving it to Switzerland because it's taxed in Norway anyway. So what you have to do then is to structure it and have substance here in order to avoid that, in order to avoid CFC. And that is what we have here. And that is different. The rules are different whether you are EU or whether we are in another country. And the last point here is that when you get dividends up here from a low tax company, it's taxable in Norway. So you have to take care of that. What many do is they put something in between, a company in between. They have a subsidiary in England. It goes from Cyprus, England to Norway. That is legal. You have to do it correct. You have to have a commercial reason to do that, of course. So this is actually a quite complicated slide. It's a lot of planning and thinking, and you just can't just transfer IP. You have to stop and think, what am I doing? Will I be taxed anyway? Because if you transfer IP and you tax here, it's 600, that tax is payable now. Or you can postpone this for 7-8 years. But you have to think those, once you take your foot outside the Norwegian border and do something outside, you have to think international restructuring. And we have a lot of clients working with all these countries, UK, Malta, Switzerland, Germany.
Yes, there's a question.
Okay. First of all, I appreciate the very easy slides that you have, and I felt I understood a lot of it pretty well because of your performance here, which is really good. Now, one of the things that is twisting in my head right now is the scale of it, because you have the 7 tokens, and I appreciate that in the way you're explaining this. But in the real world, we're talking millions and millions of tokens. This is also generating, on the Ethereum platform, something we call gas, which is the cost of transferring tokens. And you would think that in the examples that you have given, that you buy a token, you hold on to it, and at a later date you get the product, or you trade it for money. And you do this once. That's not the case that we're seeing in the real world. You're trading it multiple times, tens of thousands of times maybe, to gain some money within one day. So all this gas money or transaction cost money, I guess it's too early to say, and I'm not expecting you to have an answer for this right now, but is that money that's costing the transfer in any way related to tax deductible? Is there any way that I can write that up?
I think we can give you sort of an answer to that. We are then in the situation actually where you say that someone has acquired tokens and they are selling them, buying them, exchanging them, etc. Yeah? So we're a little bit outside of the company sphere, but we're on the token holder, token investor sphere. Yeah? I think the basic answer is that all these transactions creating either gain or loss, or maybe sometimes just the same as you bought it for, all of they are transactions, they are all taxable events, and the holder of tokens must keep records. That's the way it had to be done in the old days. If you were a share trader, even if you buy a lot of shares in one day and sell it, you must keep records. And then you have a gain or loss at the end of the day, at the end of the month, end of the year. And transaction costs are generally deductible against such income. So if you have 20 transactions, you have gained 214, but it costs you like 33 in fees. You have a net gain of X. Yeah. That's the general principle applied in most countries and also Norway. Yeah.
Kan du putte en lomma, Sverre?
Jeg tror det er deg, ja.
Nei.
Okay, so yeah, like we just heard, this is really nice to get it like simplified and easy like this, but also in the real
Virtual world.
blockchain, the real virtual world, we don't really have a lot of these structures where there's a company delivering a product and they pay dividends to shareholders. A lot of these are just networks of users who deliver services to each other, and there might be smart contracts holding the tokens, and so there's not a registered company, is not in any jurisdiction. Of course, someone deployed at some stage this smart contract onto the platform, but that person
Really?
might not even have intended this contract to do
But
whatever. It's just-
who is issuing the tokens if there is no company?
so
It's a person, of course, but on the computer. But there must be some kind of entity issuing it, isn't it? Or who is
Yeah.
collecting the money then from the issuance?
Well, so usually, yeah, there is a non-profit organization who are issuing these tokens and like doing that process. But then it's like all these, they don't actually create the value. Here it's like a startup who owns the IP, but all the IP is owned by the network users because they are actually creating the product.
Yeah.
They're giving each other value.
It's a
and
sharing economy.
It's a total sharing economy. So they also exchange the values, and the the tokens increase because they created the value themselves.
Well, I
so
think-
it's kind of it's very interesting to look at it like this, but there's also a whole new space.
Yeah, but just
apart
look,
from this.
I understand, and to make you can take away some parts of this example. You can take away the company, and it's a very good question whether you have a non-profit organization, and the question is that taxable? Because it may not be taxable. But then you're coming down to to the
Each
core issue
holder.
here is that you have 1 billion token holders, and they are for tax purposes they are doing a common business. So the worst case here is that you have you have 1 million token holders doing business in 212 countries. And some countries will say, I don't care. Some countries will say, if you have 1 token holder in Norway, taxable, then you actually draw into Norway the other token holders into the Norwegian business if you are strict. Just to make an example, there was a court case in Stavanger. This the UK lawyer came to Norway to litigate that court case for 8 months. He got what we call a taxable presence in Norway. So all the 800 partners, co-partners, were taxable to Norway because of this one guy was here in 8 months. And what we said, can't this one guy pay his tax and forget the 800 others? And we were able to cut that deal with the tax office, but they were kind of nice. But here, if you have persons like sitting on the room in China, doesn't matter. But if you have big companies here, these are big companies going into solving problems. They have records, they have books of accounts, they have deductions. They want to keep the cost in the books. Then you have an issue about who the hell is doing this business, and that has nobody looked at.
The international tax rules are kind of designed that way from all time, that if someone is carrying out business in different countries, you can be taxable to all countries with a portion. And if someone here in this network is actually resident in many different countries and work from different countries, they can all be a big group or partnership here.
Yeah.
But I don't think this is the dramatic way will be the reality here. But the thing is that this issuer of the tokens, in your case, unsecure, but all the holders, if they sell and transfer them and get some more Ether on the transaction than they paid for it, then they have a gain for sure as a token holder.
Sverre, Arne said that you get like 1 minute on the last slide, and then you can have questions.
Yeah.
Maybe
Okay.
we can also attack the...
Yeah. We have touched now on some issues for the company, for token holders, transfers of tokens, redemption of tokens, getting the sausage. What I think is important for all involved in this new economy is to be aware of the reporting, because there are no automatic reporting here. Not as your bank statement or Statoil shares. It's not reported in the tax return. So each individual or company involved should report income, gain, or loss and make maybe a short statement. So if I have some Bitcoin and I sell them, well, I make my own little statement in my tax return, so I make sure that I pay the tax I should pay. Because if I don't, and the tax guys come after me, I will get penalty tax and a lot of trouble, and there will be tax cases, and that costs money, and you could even risk to have it 10 years in the future.
And
so that's just a kind of encouraging advice. Keep some records, try to be compliant, or sometimes even advanced rulings. We haven't discussed it, but some of these issues concrete that could pop up, it's possible to direct to tax directorate to have a ruling, and will it be like this or will it be like that?
Good. Okay, guys. Sverre, Gjert, I think we have to stop there because we need to do a little panel at the end. A lot of questions. I think this was excellent. I think now more than ever, most people in the room should feel there are two things certain: death and taxes.
That's correct.
And regardless of what the hardliners in the blockchain world, and believe me, I also talk to them, they think that anarchy, they think anonymous, they think blockchain, they think this is a whole new world, and this is where the regression to the old world is not going to happen. But you have to remember, we are in a transitional phase here. So now we're going to talk a bit about that in the panel. There's no revolution, there's evolution. And tax authorities will try to get their pound of flesh. Tax authorities and governments will want to get paid. They will sue. They have monopoly on the sanction
They're taking care
powers,
of
right? So they can actually enforce stuff. So now we don't have time to sit in a panel. So I suggest you just line yourself up. But we should give you guys a hand first for your